Jacksonville's own Dream Finders Homes just logged 8,583 closings and $4.4 billion in revenue, up 18% in 1 year. Is this the start of Florida's next housing boom or a recipe for oversupply? Zonder's Builder of the Year award crowned Dream Finders Homes for its explosive growth. The company, headquartered in Jacksonville, recorded 8,583 closings, pre-tax income of $483 million, and $4.4 billion in home building revenue in 2024. And that's an 18% jump over 2023. Dream Finders controls about 55,000 lots and has expanded aggressively across the Southeast, including Tampa and Phoenix. Such rapid expansion could strain labor and materials and invite competition. Jacksonville itself may see heightened price pressures if builders overestimate demand. For buyers, the availability of thousands of lots and aggressive incentives may create a window to secure new homes before any sort of slowdown. So not every builder can replicate Dream Finders' asset-light model and scale. Rapid growth could mask risks, especially if mortgage rates rebound or buyer demand cools. So how will Dream Finders' success affect Jacksonville's local markets and other real estate markets in Florida, and is it creating new price points? Let's look at that, and let's see how smaller builders are responding. First of all, someone has to dominate a certain lane, a certain niche, and it seems like Dream Finders has really stepped into the more low-end luxury, I'd call it. Now, this is priced above the median, very nice houses, and this is a very niche type of buyer for the end buyer. These are your homeowners looking for what I consider a more luxurious home, and they have quite a position on that. Are they setting up new price points in that area? Yes, probably, if they're into the land right, and they might have to drop prices some just because of the interest rates and where they're at. But obviously, they're still making a good profit margin and still driving forward according to the numbers that we've received. So where does that leave smaller builders or mid-sized builders that are wanting to have a niche? Where we have looked and where we believe most of the opportunity is with a safer margin of safety and also just a better effectiveness of what can sell quickly with still lower margin, but still a margin, is the affordable workforce housing. It was totally underserved in the last run-up through the pandemic when we watched all of this interest in Florida. When you look at most of the homes that were built, they were in that Dream Finder segment, higher priced homes, maybe in Jacksonville, 500 to 600,000, beautiful homes, but again, not for the investor purpose, more for owner-occupied and very emotional purchases. The smaller builders can still answer the demands of workforce housing, which has been underserved. These are homes priced below the median, possibly single family or duplexes if they're willing to stretch that far out of their comfort zone. And this can line up the investors that are still coming into the state of Florida because of landlord laws, because of other incentives that we're seeing builders offer with builder forward commitments and buy downs on the rate. These investors are still coming from areas of California and New York where they just don't like the landlord laws. The cash flow doesn't work, and the cash flow still works really well in affordable markets. Jacksonville would be considered in a more affordable market compared to the Orlandos, the Tampas, or the Miamis, area in Central Florida. These are areas that we're still seeing growth, and if builders will step up, they can get in there with a larger margin of safety. Now, I get to go to a lot of different events and symposiums where it's a lot of not only bank reps, but local realtors in different Florida markets. And when you're always asking about growth and indicators, I say, what is actually going on in the market? And what they all say in general terms is the more expensive stuff is dropping in price and sitting longer, and anything that's really affordable is moving as long as it's in good condition and priced fairly with some sort of incentives hooked to it. So with realtors saying this, I still feel good about going through the end of this year, which was predicted to be a slower year for those people to focus on. That's what a lot of realtors are focusing on right now. It's nice to get that big commission on a larger home, but unless they're willing to come down in price, which some of them are, then to get a better volume with the more affordable houses is what we see a lot of realtors doing. And also there's a bigger buyer pool. So I encourage other builders, study Dream Finders. Look how they got really focused on their approach in a certain area and their market expansion strategies. What did they actually learn? What did they actually do that you can emulate? Again, I see them staying in their lane. So pick a lane, one that you can compete in and one that you can actually acquire land at right price in, hopefully, or possibly you already have the land, which is a key thing for a lot of builders right now. Sometimes land prices are still up. So if builders are sitting there with no land, no lots to build on, they may be priced out of the market on the land alone. Now, for buyers and investors, you got to look at opportunities to partner or invest with builders that control large lot pipelines and can offer better pricing. I know when you have this, then a lot of builders will take a lower margin and just sell out houses through the end of the year to get rid of certain inventory and recycle money into their next building projects. It happens all the time, but more dramatically in certain cycles. Right now, with 2025 expecting to be a bottoming and 2026 and 2027 being expected to be a really good growth year in the workforce housing affordable markets, according to John Burns, according to ITR Economics, a few of the groups that I actually follow, this is supposed to be a very good swing in the market. So what a lot of builders that will do in order to best prepare is they will offer pricing discounts in the final months of the year in order to clear that out and have building capital for next and bigger projects. So look to team up with a builder that can partner with you not only on the right properties and get it done by the end of the year, but also has the balance sheet to provide that builder forward commitment, that mortgage in place that you couldn't get from a bank right now. You could only get back in 2021 because these are rates as low as 3.75, 3.5%. They almost sound like a lie, like they're almost non-existent today. I can tell you a good builder with a good balance sheet can work those rates down with you and buy that down for you with a bank that they're in relationship with and pass the savings on to you. So look for that affordable workforce housing that can close by end of year. Look to make the best offers that you can on it, get that financing in place, and look long-term for a great cash flow and equity growth. So is Florida's housing boom just getting started, or are we heading for an oversupply? Comment boom or bubble and join the debate.